we're behind, but I'll tell you, I've been sitting up here, and we've never not been behind. It's always the same thing. It's always a difficult budget year. It's always, we don't have money for this or that this year. And that's fine. That's, you know, we don't get to fulfill all the wishes that local government has because taxpayers still have to pay for it. But there does come a point where the lack of funding for departments and lack of funding for services become detrimental to the community's health. And we are getting to that point where if you want to do everything that we need to do, it won't just be a wish list, it will be a needs list. And it will be very painful for taxpayers to do. I don't want to shortchange any discussion that we're going to have here tonight, but I do have an advertised rate that I have in mind that I would like to throw out there, and we can tear it apart if you guys like to. But I would like to have some discussion about it because I think it's important that we actually understand that we've already done a pay increase for the Sheriff's Department about 3 years ago or so, which was significant, and here we are again 3 years ago. We hear from the school system, the previous school boards that would come before us and ask for increases, and many years they didn't get it, and so now the school board has changed. There's new folks on there with different perspectives, and what do they do this year is they come basically with the same requests, much higher than previous years, but nonetheless saying that we need more revenue because we are doing what we're doing on a bare bones budget, and you know, at some point things are gonna break. And so, knowing all that, knowing that we can't do everything that we want to do or has been requested of us, I would like to throw out, for discussion purposes, and we'll see where it goes tonight, that we advertise a rate of $83.77, which is 10 pennies higher, and the breakdown of that would be 6 cents more for the schools, 1 penny more for the county government, and 3 pennies more for public safety. I got my math right on that one, so that adds up to 10. So it would be 0.8377, which I would also mention still keeps us below Stafford. And if the administration up there gets their way on their proposed budget, I think it was a 9 penny increase above what they have, which I think is 85 currently, something like that. So we're still going to be well below them, is my point. So I throw that out there for discussion. Thank you.
Anyone else?
Well, even at that, it doesn't cover what we need or what is desired. So there's that. You said a penny is like $2 per month, right? So if we're at 10, then what would that equate to?
That would be $23 a month, $274 a year.
So you know, we are faced with a very difficult time right now in determining how to address this issue. And I think everyone who got up to speak, and I think most of us up here understand that our value is our people, our employees, and when we can't retain them because we can't pay them enough, that puts us in a very bad position. And having other localities just go ahead and make these huge bumps, you know, I don't know what you can offer. I mean, you can say, well, you live in Spotsylvania, it's a better county, whatever. But, you know, it comes down to money in your pocket and food on your table. And part of this is unfortunate because, you know, inflation has impacted all of us. And, by increasing the tax rate, there's another inflationary item for people. So, you begin to balance, okay, well, you just got a bump in pay, but guess what? Your taxes just went up too. So I just want to be clear on that. I'm not, saying that we shouldn't have, or I wouldn't support an increase. I just want to make sure that everybody understands, it's not like that you have a gain and there's nothing in cost, because there is.
Well, I don't stand in judgment of what our past practice has been. But I will say this. I've been on the board for 3 years. This is my 4th year. And what I have tried to convey during that time is that our actions will lead to consequences. In times that are difficult for us, we are forced with looking at something that really it's not feasible to add 28 cents because of inflation, because of all the other things. But being fiscally responsible is something that we have to take a look at. And I want to plead to my peers that we come up with a way that we're actually talking about these things throughout the year. I feel that we need to have a plan. We're being reactive instead of proactive and looking at opportunities that we could. We don't have a mirror that we can, a crystal ball that we can predict what things will happen and how they will happen. But it's better that we do things incrementally as we go forth and not just rely on 1 year to have such a large increase. And if we don't consider something close to what Mr. Yakabouski has proposed, next year we're going to be even further behind. So that's my comment for right now.
Just, we hear the same arguments every year, and we seem to we're doing okay. And, again, this is the worst case we presented here. We haven't scrubbed the budget to look at, there's a lot of projects, there's a lot of things in the budget that need to come out. I mean, there's a lot of construction projects that I still do. We had an $800,000 request to patch a tennis court today. I think that's something that could be delayed in order, the public safety in the schools and all those other things that probably have a higher priority. That's one of many projects in the budget that we can go forward with. There's if you look at the CIP budget, there's a lot of projects in there, and this is probably the worst time to do construction. Costs are up, labor's up, cost of money's up. All of these things we have to look at. Maybe we should delay some of the projects to help fund some of these things. And whether people want to believe it or not, we're in a recession, right? I got gas today, $3.25 a gallon at BJ's, right? So that's discount gas, $3.25. Eggs, $6 to $7 a dozen, right? Unless you got the ones at home. At McDonald's, a meal number one, $11, right? Take your family to McDonald's, it's over $50 now for, cheap McDonald's. Interest rates, they're significantly higher than they were a year ago. So even though we're talking about, raising just 10 cents on the, or just $400 on a family, that's significant when you add all the additional costs associated with all of these things that we're asking the taxpayers to pay. And so I wouldn't want to be just lightly looking at this tax increase. So I want to put that out there. I mean, I think maybe we'll support this year, this increase, and you can fight it out. But I can't see myself increasing taxes this year, particularly the way the economy is going. And I don't see it getting better anytime soon. And if you're paying attention to the news, several major banks failed this week, and they probably won't be the last. So when we put an additional burden on our taxpayers, think about that. Okay?